So guys, so this is a new thing that I'm going to start where I will be breaking down my trades for you guys, and I'm sure this is going to be extremely helpful for you people, because this will teach you my psychology, this will teach you my execution and a lot of other things. So this is just another initiative to add value to you guys. So whenever I take trades, I will try my best to execute them for you. Sorry, break them down for you, right? So let's start from the very beginning. So if you remember, when I posted the analysis, the price was somewhere over here, and I clearly mentioned that my bias is bearish. I would look only for shorts. I'm not interested in longs because of the higher time frame trend of how it looks like, and that's what happened. So you see, price went up. Okay, price touched this zone. So now when price touched this zone, there was a very high chance that price could reverse back down, because obviously the higher time frame is bearish and my bias is also bearish. So I was looking for a short. So now, from a very layman's perspective, let's say if you're a complete beginner in trading, what you would expect or what you would want to see from the price is, let's say if the price is supposed to go higher, what would it do? It would make higher highs and higher lows, right? This is what you would expect. So here what I did was I just didn't randomly go in short, because obviously the price was going up. Even though it was testing resistance, the price was still going up. So I wanted confirmation. I wanted a confirmation from price that, you know what, I want to go down. I am bearish and I am interested in going down. And that's exactly what I was waiting for. So the price went up, created a bearish candle, went up again. So the lower high and lower lows, the higher highs and higher lows were forming, right? The higher highs and higher lows were forming, and I was waiting for a candle to break this support, because price was taking support over here. As you can see, this was a resistance turned into support. I was waiting for the price to break this support. As soon as the price broke support, I wanted to enter, because that would be a clear cut sign that, you know, price wants to go back down, because price would break structure, market would break structure, market would break this higher high and higher low structure right here, and that's exactly where I entered. So when this 5-minute candle closed, you can see that's exactly where my entry was. My stop loss was 2351. So it was a very small stop loss, hardly 15 pips, even 12 pips stop loss, and I entered around 10 lots on this. I entered over here, stop loss over here, and my target was obviously this support zone, because this was the bare minimum I was expecting, right? Because obviously if the price, this is the range that we are trading, so this was the bare minimum I was expecting. So this was my target. 2345 was my target. Now let's go to the 1-minute time frame and go into the depth of the execution. So as you can see, this was my entry right here. I will attach the MT5 execution screenshots as well. When the price came down right here, this was a very beautiful move. So and it already gave me more than 1:1 RR, so I exited half over here. So this was my very first exit, somewhere around here, because 1:1 was achieved. So I exited 50% over here, then price went up. So now if you want a very simple rule to know when to exit your winning trades or when to hold them, so in a very simple language, so what I like to do is, whenever there's a candle against me, I like to close half positions. Whenever there's a candle against me, against my trend, against my trade, I like to close half positions. So first of all here, so as I told you, I entered 10 lots. 5 lots were already exited over here, which was 1:1, and then I was left with 5 lots. So another exit was done after this particular candle right here. So this was another 50% exit. So basically now here, half of 5 is 2.5. So I exited 2.5 lots, and I was still holding 2.5 lots with a stop loss to break even, right? And then obviously what happened, price went down, hit my target, and my last exit was around 2344.6, somewhere over here. So this was a brilliant 2:8, almost 1:3 RR trade. Brilliant trade, brilliant. I think I would give myself 7 out of 10 in this, in terms of execution. I could have held this still here, but I was not really interested. What is important is, what I want you to learn is, hindsight is never going to help, first of all. Second thing, what you need to do is, you need to make sure that you win consistently. Consistent win is important. Winning once, taking a trade once, and making 1:10 R on that, and then losing every other day is not what we want to be. We want to be a consistently profitable trader. So as long as you're getting 1:2, it's fine. You can just exit and not regret it, because you did your best, right? and that's what I wanted to do as well. So I exited over here. And one very important thing I want you to take away from this trade, guys, is that never ever change your bias. Never change your bias. If you are short, if your bias is short, then you have to keep in mind that you are going to go short and only look for sells. Because if you are short and then price is going up and then you decide to buy and all of that, you get so confused and then you end up taking stupid decisions. So decide your bias. If you are short, if you are going to sell, then stick to sells, and no matter how high the price goes, don't buy, because that is going to give you a lot of clarity, a lot of mental clarity in terms of executing your trades. So guys, if this video helped you out, if my execution analysis and my trade breakdown helped you out, please comment below on this particular video, because that's how I will know whether I should continue doing this or not. And I'm sure this will help you out a lot to understand how I execute my trades and all of that. So perfect, guys. I'll see you guys very, very soon. Bye bye. Take care.